Good morning, and welcome to episode 53 of Getting Rich. I'm your host, Rich Checkan, president of Asset Strategies International, and today is Wednesday, December 1st, 2021. I'd like to start off by welcoming everybody back from what I hope was a very relaxing and wonderful Thanksgiving holiday. Hopefully you didn't eat too much, but if you're like me, the food was too good to resist. Hope everybody had a chance to reconnect with family and friends and ponder what it is in this world that we are truly grateful for. If you're like me, there are many, many things, and we definitely need to show that gratitude. Looking back over the past week, one of the biggest events I think just happened yesterday. If you recall, last week I talked about how Chairman Jerome Powell, chairman of the Fed, was renominated, and Wall Street loved that because it meant the punch bowl was still going to be out there. He was still going to be very accommodative, free and easy money, thanks to Chairman Powell. And the markets really like consistency and predictability. They don't like uncertainty and volatility, so they know what they have in Chairman Powell, and they were happy to see him stay. Well, yesterday, he spoke about the fact that he's had it all wrong for over half a year, and that's something that we've been calling him out for on this program and in our writings, our monthly and bi-weekly newsletters and alerts. We've been talking about the fact that he hasn't been coming clean with us and he's got it all wrong, that inflation is not transitory. In fact, in my opinion, the Fed created it. The supply chain disruptions that Chairman Powell says they underestimated were created by the government shutdowns. Folks, when you take that well-oiled machine of logistics of products and moving all around the globe and you just grind it to a halt, guess what? It's going to take a while to get it back going again. You've shut down manufacturing, you've harmed inventories that can be delivered to people, and therefore supply drops as demand, once economies open, starts increasing. In addition, you've flooded the market with free and easy money. What do you expect, Chairman Powell, other than inflated prices? That's what you have. They're going to be with us for a while. I'm glad you finally recognize that. He also said in order to fight it, they're probably going to have to cut down on their asset purchases, so taper a bit more quickly, have it wrapped up by June. Let's face it, folks, that's great, but between now and June, make no mistake, that balance sheet is still growing. They're still buying more between now and June. Make no mistake. In addition, they talked about a couple rate hikes, potentially, end of next year. That's not going to have any impact, quarter, half a point. We're still going to be negative real returns. Your only solitude is gold. Make no mistake. Chairman Powell has given you a gift here. The market's sold off thinking, oh my God, tapering's coming, interest rates are going up, so we need to get rid of our gold and silver. Come on, folks. You need your gold and silver right now. Let's take a look at the prices over the past week. Gold is down to $1787.40 from $1790.90 last week. That's a 0.2% drop. Silver's down to $23.02 from $23.66 a week ago. That's a 2.7% drop. Platinum is down to $962 an ounce from $984 an ounce. That's a 2.2% drop. And palladium's down 5.3% to $1,856 per ounce from $1,960 per ounce. With silver falling further than gold, the gold-silver ratio has moved up to 77.94 from 75.97 last week. And the dollar, amidst all this, because it did get sold a bit over the long holiday weekend, the dollar is down to 95.92, below 96, whereas last week it was at 96.72. Folks, we have an extended buying opportunity in gold and silver. There's no question that you need it in your portfolio for times just like these. We're going to talk a little bit tomorrow in our monthly information line newsletter, the December issue, about why you should be grateful for gold. We're going to look at 3 different separate vignettes around the Vietnamese refugee era, so the mid to late 70s, early 80s. We've got a wonderful video put together by our friends at Bullion Star in Singapore, where they talk about gold in crisis during the Vietnamese crisis and how it was the money of last resort. As many of you know, here at ASI, we are near and dear to this issue because Michael Checkan and Glenn Kirsch, when they worked for Deke Pereira, worked with refugees in 1975 at Eglin Air Force Base. They saw firsthand the value of having gold in your portfolio to transport that value across jurisdictions, across boundaries, and start a new life in a new place. They saw that firsthand. That is the epiphany that led to the start of this company almost 40 years ago, back in 1982. And we also reached out to one of our special clients who was herself a Vietnamese refugee, and she answered some questions about what it meant to her to own gold and what she sees going forward as the protection for anybody looking to protect their portfolios. You need to sign up for our newsletters. You need to like us and follow us. You need to like us and follow us here on YouTube. And please don't ever forget that getting rich starts with keeping what's yours.